boys and girls. Let this show on the road. Let's get this show on the road, indeed. Give me a sec. Right. I think I should be fine with the chat. Everyone sees the screen, or should be at least, I hope. Let me just verify that. Perfect. Everything should be in order. Hello, everybody, from Alex to Nannies to, of course, Olimiu. Oh, I hope I'm correctly reading it. Olimi? I hope I hope I'm not butchering it too far. I hope I'm not. Alex, don't bother too much. I think it's gonna be mostly our friends of the community and such, people who know I didn't really post this time around. Hello, Chris. Didn't really post on the Discord this time around. Just in the partition, just that allows hello Ev, the members, the Patreon members to see this. Of course, it's public; everybody can join, but I don't think there will be a lot of people this time around. I think the people who join smash the like all the time anyway, so don't bother too much with that. Nannies, also take your time, chill, relax. I don't think we're gonna have a lot of new visitors today per se. Those who bother to come and watch, it's for their benefit. So again, as we said, we're not gonna be chasing anybody here. So pretty impressive, I gotta admit. Pretty goddamn impressive. We actually made our way beyond the 555, beyond the give me a sec, yeah, beyond the 5607, which we actually touched upon today. We actually gapped off, and we still have not closed the gap. And right now we're right about 50% into the gap. This is the gap that we need to close. We're about 50% into it. That's actually very impressive under the momentum that we were seeing. Of course, we did get another very prolonged wave, just something a bit out of the ordinary, but then again, not abnormality. So what we're gonna do today is always, let's run through the time frames and see what the market has in store for us right now. It is very, very probable, just looking at this, that the market wants to close potentially this gap. We know the 1 minute is very volatile and going to change various times back and forth, so it doesn't really matter all that much. What matters is the fact that the market tends to, when already tending to the gaps, when already starting to close the gaps, basically having price action to travel through, it is very much more common for the price action, the behavior of the market, to actually close, meaning run through all the way and then continue do whatever. We coincidentally have, of course, that 5,646.95 resistance, right? So, but let's look at the overall picture, kind of get an idea where these gaps are from. If, of course, oh, here it is. Yeah, it will allow. There we go. We do have this gap from before, and we have another leftover gap, if my mind serves me right, from prior to. Where's that? Where's that? Do I see that, or did I skip over this? I think I might have skipped over the gap. No, I did not. Here it is. We have this gap left over, and we have this gap. And so that's kind of this combination. And now we're working currently on the gap that we're in, which is this one, right? We are currently on not the primary gap, we're on the one below it. And we now generated another one right below ourselves. Why are these so important? Those who are familiar, already been around, those are basically almost the equivalent of chores. The market sort of needs to close them. Now let's look at the momentum. The momentum is right now showing that we're basically squeezing the leftovers of this bullish momentum that we've had, and we're pointed to the downside. Of course, we had a bit of a chill off. Right now we're going for a crossover again on the bullish and bearish forces. In other words, giving us more bearishness and tugging us to the downside. So that at first glance, it really is hard to see and discern whether this gap is going to close, because the 5 minutes is kind of iffy right now. Not really certain whether it will close, not close, not certain. So what do we do in that instance? Of course, we continue to the larger time frame, which is more interesting. This is where we get actually to see what the time frame, what the price action has entailed for us. So here it is very, very bullish, has been bullish for quite a long time. We know what happens when that happens. We usually often go for a convergence, divergence, subsequently giving us a correction to the downside. We're basically squeezing that lemon for a while, and that was expected. We did talk about it when we started, when we're potentially going to go up. Of course, we did not squeeze that down wave at all. We basically almost canceled the whole thing got the whole thing got canceled out, and then we pushed to the upside. Right now we have the opposite situation where we're building up, all the tension is building up, and subsequently once we squeeze out all that bullish momentum, we are ready to go down. How do we know if we're ready to go down? Let's see what the larger time frame says. That's kind of the trick. We're going all the time to the larger time frames. The problem, most of you know and aware, that the situation is not going to change by any means, because the structure is bearish overall, right? We know that from the larger time frames, but that's kind of where everything stems off of. But we will start smaller, more granular, more zoomed in to understand really what's going on. So we said this right now is still bullish, but it is potentially moving towards that. It already is breaking down. It's already moving through these stages of dying out, basically, if you will, using up all the fuel that it had, subsequently going for a cool off, a correction to the downside. Not really surprising. So we saw this yesterday. Similarly, we have that on the 45 minutes. The market looks like it's going to correct very shortly. Is it right now? It's a little bit more bullish. That's why we're getting this. So not all that surprising, but let's see what the hourly gives us. The hourly is really, really important. It's really crucial, to be frank. The hourly is probably the transitioning point when it comes to the time frame. When time frames, it really is the transitioning point between the smaller time frames and the larger time frames, because if you look objectively at 1 hour, you can pretty much extrapolate the rest of the session, right? So this session, although right now still is bullish, potentially gonna overturn. Now the problem is that we haven't squeezed the 4 hours yet, so this kind of implies that this 1 hour, although getting ready to go bearish, will still remain bullish as long as the 4 hour will. You see, they're kind of conditional to one another. Now, how long do we have until we close the current 4 hour candlestick? We have 2.5 more hours, which will not bring us to the end of the session, which means this session can sort of separate into 2 parts. Because if we're going to have actual convergence of the forces, these on the next candlestick, what we will see is this, which will inherently scare the technical traders. The bots will trigger. We're gonna start to see how the bullish momentum dissipates, basically, very rapidly, in fact, through the second part of this session. We do know that the daily is still bullish, but really, is it? Again, we're not here to speculate. Remember, we're gonna go with what we see at face value. At face value, this is bullish, right? But the problem is, if this is bearish, potentially very, very soon, just around the corner of being bearish, and this is already bearish, so this, what we're getting in the 1 day, can be converted very, very rapidly into bearish momentum as well, basically giving us more of a downtrend rather than an uptrend, which what we spoke about, that starting to become more visible when you zoom out. If you don't zoom out, you don't see this. This is the flattening of the curve, right? We were going very, very rapidly high, and now we are flattening, basically. And once we are done with this process, we're most likely to correct to the downside, because we see that the larger time frames are very bearish, and they have been so. By the way, notice we have been talking about this, right? The convergence and divergence. You see how the forces play around until we have the closing of the month. And of course, we still have 17 more days. Since we do this pretty much every day, we can see the change every day, how it sort of opens up, closes up, and changes its form. But in reality, what are we expecting to see towards the end of the month? That, because taking dominance, right? That you cannot, for this to change, we got to have several more bullish waves. Is that in the cards on a smaller time frame? It's not. So you see, it's very there is nothing bullish to spill over into this time frame. In fact, the little bit of bullish momentum that we have, which is the 4 hour, and we already agreed about to get squeezed out very shortly, right? And what we are seeing, although very, very weird and almost invisible to those who are not familiar and inattentive, is we're getting lower highs on the absolute maximum ability of the squeezing of the lemon, if you will, but still are consistently lower highs and lower lows. Right now, this, of course, is a lower high, so it seems as if we're transitioning, but this is just a part of the process. There will be multiple impulses to the downside, as we described, taking that downtrend. That is that. And we said weekly. What does the weekly show us? Of course, we said the weekly is more bearish, and that's why we're waiting for that bullish momentum to dissipate and spill over, become bearish. That is that. I think we've covered all the necessary time frames. We know the monthlies will potentially in 17 days, of course, we're going to see, and as we go, we're going to see what it really is. Seems to be a lot more bearish in potential, hence giving us a closure of all these gaps that we've generated on our way up and solidifying a new support and potentially new resistance on a lower plane. That is the monthly, really. Okay, so now that we're done with all that beautiful stuff, 3 months, there's nothing, these will update again once the 3 months will update once the monthly will update in 17 days, and the 6 months, we have 3 more months and 19 days subsequently. This is going to take forever, so we have a lot of time. And that's about that. Let's go deeper, of course, so we can see what the price action is doing actively as we speak. And we can tend to the chat and hang out and just converse and see what you guys want to look at. Palantir, in the time being, just as I suspected, had this resistance at 35.33, which you can see came through perfectly right here. A little bit less visible right here, but it is. To those who are more hawk-eyed, will notice exactly what's going on. Wink, wink, magic, right? But we still know you have that 3604 above your head, which seems to be the current the absolute resistance that you're going to have before we're going to break down. We did suspect that. We said we have still more bullish momentum in the system, although we had that convergence. There you go. You don't have to, every time it switches over, it's like, that's it, we're going to go to the other direction. No. It usually completes the processes, so that made sense to us. We said in potential that's bullish, not bearish. Kind of the same trick when we look at momentum that seems to be bullish, we say, well, not really, it really is bearish, because the fact that it has a crossover somewhere around here doesn't mean that that's it, we're switching, we go back. No. If anything, what it means is it's a cool-off period before we continue, right? Same thing, vice versa. Now, so yeah, you see, that's kind of that's actually what I just said a second ago. So this is actually bearish, but the fact that you have a cool off, it's a cool off, cool, but it's bearish. That's the reality of the thing. Let me just switch it over so you guys can have it as you're already familiar with. Almost done a mistake right there. That would have been weird. All right. Let's go. Just so you boys and girls can see that better. And in fact, let me just make it thicker, right? Like that. Perfect. Like that. That's better. Like that. Wunderbar. So you see, right now it's bullish, but it's temporary bullish. It's very similar, in fact, to what we've gone through right here, or we do on any stage of the wave. This wave actually has ran its course. That's actually entirely part of the upwards wave, and now what we're starting to see over time is the breakdown, and the waves, although will be pulling up and down, the majority of the time will be spent in oversold territory, amplifying the effect. Nannies, thank you so much. You're a legend, boys and girls. Nanny just put the Discord link. Those who are not familiar and somehow randomly found themselves on this live, this is what we do here on the daily basis. At least I tried to yesterday. I'm sorry I didn't do a market close. I was busy on a one-on-one session with nannies. I'm so sorry. Just happened so that my schedule kind of went off, and I was not able to make it earlier before the session, and then it was just redundant. I didn't want to keep you guys busy when you had other stuff to do. Of course, we're not blaming nannies here at all. We're blaming me. But that's what happens, boys and girls. That's just fine. Of course, I know I got you ready yesterday, so there were no surprises for you at the end of the day, regardless of me not doing this live. But those who don't know, I usually try to do a live in a market open, market close. And if we have special events, of course, discuss these and have some gatherings. And we have our Discord where you can join. Don't forget to join the Patreon. This way you get access to the membership partition. You get to hang out with me on a daily basis pretty much. And the rest of the boys and girls in the voice chat. Those who are interested in knowing about my one-on-one academy, which has right now just only 2 spots left, DM me, direct message me on Discord. And that way you get to ask all sorts of questions about it, and I get to answer, and we get to move from there. That is that. Let's go to the market right now. Like I said, to me, that seems like the market will close. Now we're kind of when we ran, now that we ran through all the technical analysis and what the momentum is saying, I can sort of give my 2 cents on this. Look, it is far more common and probable that once the price action has already penetrated the gap, it is far more likely that the price action will continue and complete the gap, then test the ceiling. In fact, might even jump on top of the ceiling a couple of times and only then subsequently drop to the bottom. I'm sorry if there's some noise in the background. My apologies. I hope that will subside in a sec. That's just my apologies for that. So now, although and I said I do think this will come. This is what we're seeing on the 4 hourly chart, right? I think it's that leftover momentum that also spills over to the 1 hour. We were prepared that this is going to be bullish. It just ended up being a little bit prolonged and more bullish than normal, right? Usually we basically what we got here is a combined wave. If you notice, we didn't really have a correction on it, just sort of continued with a bit of a pocket, if you will, nothing really too substantial. The wave kept on going. But in this instance, what it does, it almost loads the system with a lot more bearishness. We're basically just using up whatever reserves we had. And this, I can assure you, will take quite a bit of time to recover, and or on our path down can be in fact a lot more painful. Remember, I told you, this path and this path do not have to be equal. It's not going to be 1 to 1. Here we could be moving upwards, I don't know, $100, but here we could be dropping 200. At the end of the day, what is it that we're retaining on the larger movement? For example, if you notice what we've been doing all along, regardless of, right now we're just starting a new wave, and that's sort of what confuses people. Yes, we got a higher low, but how do you know? We also got technically higher low on the internal processes as we were building the wave down, you see? So that's just part of the wave down, or at least that's what the technicals imply to us, right? For example, this will be equal to that, right? So we're kind of getting the idea here. So this is how you boil the crab, boys and girls. This is how you allow the institutions to sell again and again and again at these relative highs by, well, conditioning the traders, the market, anybody and everybody, basically. More so, the bots recognize the potential and, of course, squeeze it out as well. So you need to understand that it goes all hand in hand. But this is how you boil the crab, and this is how you allow the institutions to sell at relatively similar highs, unload, and once they're ready, we go. Why do we think that is? I'm just going to put this one thing on the screen. Those who are not familiar, of course, will be able, we have this picture to explain exactly what happens when the Fed starts to cut rates. What really happens? How does it really look like? Or more so, to be more simple. In fact, let me bring the other picture up. I think it's better. Those who are not familiar, you can see clearly on the screen when the Fed actually starts to cut rates. This is where the price action in the market actually breaks down. The volume breaks down and we have a crash, and that happened pretty much every time. Look, if you look at history, in fact, I posted something very nice today on Discord. I highly recommend all of you in the community go. I put it in finance, so you guys can go to finance right here and watch this. This is a little clip by Bloomberg. It's not too long, and it talks about how many times out of all the recessions did we really have a sort of how often did we have a soft landing, right? How many times were the Fed were actually able to prevent recession, if you will? How recessions ended up looking like, when and how, and all that. And that's a very interesting video. It sort of breaks down and very much talks about our current conditions. Those of you who are familiar know that we're not just looking at technicals, we're looking at everything. We're looking at the macro, we're looking at the story, we're looking at absolutely everything, the fundamentals. We look at everything, and all together we bring that into a singular equation. That's how we perceive the market, right? Of course, to each their own. We handle our portfolios according to our goals and expectations and targets and ability to deal with the pain, if you will, right? The pain threshold, some of you like to call, or risk aversion. But at the end of the day, you need to remember we're in this business to make money, right? This is not where no one is here married to any company, and we should be looking out for our portfolios at difficult times. That's all I'm gonna say. Danny, good to see you here. Hello, hello, Danny. Hello, Johnny. Bless me, Greg. Why bless me? I was just going to ask you when make a video. Johnny, I wish I wanted to go live earlier. I was supposed to have a one-on-one session. I'm assuming something happened and my student ended up being busy, and I was not informed on a cancellation. And it happened that I was basically waiting to go through the session, and I couldn't tend to the live if suddenly my student will become available. Just obligations, if you will. Pardon me. I will try to plan out my schedule differently next time, so I will be with you guys when the market opens. Those of you who know, the intention is to go live at what is my time 4:30, right? When the market opens, exactly when the market opens, that's when my plan is to go live. I should have gone live basically an hour and a half ago, right? That was the intention. But well, things happen. Things happen. But here I am. I mean, as the second I was able to go live, I did. I was really, really excited to go live today with everything that's going on to show you and talk to you guys. I really love doing this, like I said. So for me, this is very, very, very fun. I hope you guys like these lives the same way Johnny and the rest of the members that mentioned this. Yes, Nanya. Hello, hello, indeed. I said hello, Danny. Hello. For non-Discord, yeah. Mama wrote for non-Discord members. Absolutely, yeah. Guys, notice what Mama is writing for non-Discord members. Here you can find the link. Okay, you can join the link right there. That's our Discord. By the way, I do hang out in the public as well every day. I just do that a little bit earlier than I do in the members, and I do hang out in the members partition a lot more and for longer. Just to be clear, I do hang out in the public voice chat as well. Join me there if you don't find the membership to be useful or you can't afford it. It's fine. Join the public. We do hang out and join and talk to you guys all the time as well. Johnny, you're such a legend. Thank you very much. No need, Johnny. I think today we're gonna have mostly our regulars. It's fine. You guys, look. I tremendously appreciate you guys coming. I'm not even kidding. This is not one of those cliches, various YouTubers online. I have a very tight knit community. I get to talk to most of you on a daily basis on the Discord, anyways. I tremendously appreciate your time and that you show up and you want to hear what I have to say. In fact, Tim and Tom and the rest of the guys used to say that a long time ago that I should start. It's just I was postponing because I didn't really think I had the time to be fully obligated to this thing. Because I know when you start, you better be serious about this. Once I realized I have the time, here I am. I really do enjoy this, and I hope you guys do enjoy this as much as I do. For me, this is awesome. I mean, otherwise, I wouldn't be doing it on a daily basis. I would just find, I'm not that sort of person, but I would simply, clearly, openly say that's not for me or something like that. You guys know I'm straight up honest about this or anything and everything. I can't be any other way around to even, I can't lie to save my own ass. It's very difficult for me. Nanny is very correct, guys and girls. Those who join the Discord, not familiar, you have to confirm the rules. Otherwise, you'll be stuck in the rules channel forever. Never get to see the actual Discord. Leo, hello, Lolo. Good to see you. All right, boys and girls. Let's look at the regular culprits. That's obviously we're stuck here at 120. We know. I think we know why that is. If I remember correctly, what we have on this one is we're going to need to cancel the extended hours and see the gaps. Yeah, that's not that surprising. So yeah, that's what we said. We're going to see the gap closing. Now we're dancing right on top of the ceiling. Not all that surprising, right? We're kind of dancing on the ceiling of that thing, you can see, right? That was expected. And sooner or later, we're going to go for a correction that we are already expecting through the overheating of the momentum. So still a lower high, giving us a trend to the downside. We know our supports and resistances. We spoke about them before. We tested some of them. We know that's 110, right? 110. We also have the very next level, the 91, 68, 87, 04. And of course, we have the psychological 100 in between. So we have S1, S2, and S3 as a range, right? They're kind of a range. They're 91, 68 to 87, 04. That is that. So now you can see them all three on the screen, right? Yeah, we just gone through NVIDIA. There we go. We've covered NVIDIA. Microsoft, can you check Microsoft? Sure, yeah. We can check Microsoft. Why not? Why not? Why not? We've gone through Microsoft the other day, I remember. Today we haven't. Boys, be attentive, please. Boys and girls, be attentive what we're going through. Please don't re-ask tickers over and over again. So once we go through something, we don't have to cover it a billion times, right? Whoa. Actually, the weekly is. Yeah, right. I remember. Now I remember. Right. Look, Microsoft is actually bearish, but it's temporarily having a cool off, and that cool off actually might be somewhat decent. But then again, it's already starting to see that flattening of the curve, right? The curve is kind of where it was very steep, and now it becomes a little bit more flat. What does that mean? We don't know. It might be a temporary correction just like this, but we know in the context of the overall market, which we know this is very much a big part of, it's going to be affected, and if the market will dip down, the market will dip. Microsoft will correct with it more. So it's not about price ranges; it's more about timing. So if the market starts fixing, Gary, is you the Gary we were supposed to? What Gary? What happened? What is going on? Let me see what's going on. All right. We can see the Fed easing. Yeah, no, Leo. The what's gonna happen is the Fed are gonna either they either gonna skip this one and then cut rates further on. They push themselves into a corner where they have no longer another choice but to cut rates, simply because inflation is not really going away anywhere. It's kind of chart. What do you mean showing the Fed? Oh my God, boys and girls. Thank you. I'm still showing the, oh my God, thank you. I'm a moron. Right. Wait, have I gone through nothing? No, I think I haven't done anything. I don't think I've done anything, so I'm fine. We didn't miss much, right? Gary, thank you very much. Wait, have I Nvidia? Wait, have I covered Nvidia while I was on a different screen, right? I was stuck on a different screen. My bad, boys and girls. I completely forgot about that one. We missed NVIDIA? All right, Chris. So, I mean, NVIDIA, here it is. It's pretty simple. Look, the trick with it is that if you look at it, look, I'm going to do this. If you look at it right now, what I've done, what's different is, so I've changed. You see here in the corner, you have regular trading hours and you have extended trading hours, right? So extended add in these pre and post market partitions, right? You see these columns, the blue and yellow. The blue, of course, is evening, right? And the yellow is morning, sunshine. Okay, makes sense? Now, just remove that. That just looks bad. Right, so what you don't see in this one is the gap. So in order to see the gap, what we do is we cancel the extended hours, we go to regular, because the bots are aware of this, and the bots are highly magnetized to close these things that are above our heads right now, that you actually see. And the technical traders that are aware that the bots are magnetized are playing off of this as well. So it amplifies the effect more, so we can see that the momentum is building towards it, right? We see that the momentum is a lot more bearish in reality. If we're going to look at the larger time frames, we're going to realize it's a lot more bearish than it's bullish, right? And it's basically going very, very hot and getting ready to drop. Give me a second. I'm just going to close the shadows here. Not sure how much that will help, but hopefully it will. Sorry for the chaotic stream today. There's obviously a dog somewhere outside there barking. There's nothing I really can do about it midstream, so it is what it is. So you see in reality what's going on with NVIDIA. And by the way, the supports and resistances, we know, we kind of spoke about this. And so how do we see where we were and why we would expect to close this, right? You see this gap? So is it that surprising that we're right now, basically the price action is jumping on top of the ceiling of that gap, right? You can see where it is, what is going on, right? It all kind of makes sense. But we know the momentum is to the downside. So it's far more likely that we're going to correct to the downside. Then if we're going to have some bullish momentum, we'll correct back to it. So to have enough momentum to go actually to that 124, 125 area, we're going to have a lot of bullish momentum, which we kind of are running out of. You see? So it's kind of a problem. I think we might be leaving this for later. Might be. Or maybe that's going to be part of the bullish momentum we have on the daily. Although on the daily, what we're actually seeing, if you ask me again, since now we're kind of talking, just looking at face value, this is going to overturn. I'm not sure we actually have enough momentum to close that gap. And even if we do, it's not going to be all that bad. It's not going to be all that surprising. It still is going to retain the lower low. It's just that does not seem plausible based upon the momentum we have. It's not like I have any bias, nor do I care whether it's closed, because you need to understand that your weekly or far larger time frame is a lot more bearish. So you see the problem here? And more so, you have the market being very bearish. So we already spoke about the supports and resistances. I kind of reiterated them and emphasized a couple of times by now. Just give me a sec. So we said currently, let me just remove that, we have S1, our support one, although technically you would argue, well, Greg, we're on top of that 118, if you will. That's kind of a support right now. Yes, I would call that nothing but other than intraday. It's not that strong. It's not going to hold us more than a day or two on top of it, meaning probably next week we're done with it, right? The way we look at this, my analysis brings me to 110. It's going to be S1. Okay, and what just happened there? That was interesting. S2 is psychological 100. It's institutional. It's a lot of things. It's not really 100. More so, remember, it's 1,000 because of the split, right? So, in various analysts' mind and those who are more sort of longer in the market and more proficient still look at it in this way. And they look at the market cap. That's what's important, really. So that's your S2, and your S3 is a little bit abnormal because it's not a single number. Your S3 is actually this, which is a range between 91.68 and 87.04. Okay, in other words, call it 91 and 92, even if you really want to, if you really insist, because with slippage and all that, and call this 87 or 86 and a half, right? There will be a margin of error. There will be deviations. In fact, you might as well just call it 86. Why? Because that's how the market works. The market is not going to stay in line because the market is like a 6-year-old, basically, or has like the fine-tuned control of its muscles like a 6-year-old. Greg, we can't see. You guys need to notice that it takes me time until I notice what's going on in the chat because I'm always behind. It's a little bit difficult. Me too, explaining. I appreciate that. Chris, we can see Greg. Okay, I've solved that by now. Microsoft, being on my own theory. So, Correct. Lost. Wait, Johnny, did I do Microsoft off screen as well? God damn it. Uh, right. Everything is off screen. I'm a moron. You see, that's the moron. Hmm. It's you see it on the screen right now. It's kind of self-evident. So we're gonna go down. We're mid downtrend. We can see that on the monthly. And what confuses people is that the in between, right before we go into that whole overall process. Now this is bearish. You need to understand that most people perceive this tool to be simply working up and down. And even if it does go up and down, as simple as people perceive it, it's not true to understand from it that this is $100 up and this is $100 down. That's not how it works. How is it that we don't end up in the same spot, basically? How that we actually end up moving? Again, this is more like a seismograph that represents the momentum itself, when we run out of juice, fuel, if you will, and your speed gauge to some extent. So currently what you're seeing on the smaller time frames, although indicative, for example, this might be indicative to the naked eye as bullish because, hey, green on top, dominant, and we're going up. No, that's not how it works. First of all, we're oversold. That means we're going to get amplified, in fact, far more the same way we do these. You see, this is bullish, right? You also get the opposite and bearish. It does If it's going to go up, it doesn't mean that you're actually going to go up. It's far more likely to go for a correction. Why? Because if you look at the overall structure of most of your momentum, it's negative. It doesn't matter whether, if you have an outlier, what you do is you look at the consensus of the most of your time frames, especially those who are on the larger end of things, right? So if let's say you see your 4 hour being very bearish, potentially very, very soon, right? Yes, you do have some more up, like we said, you have a little bit more to squeeze. I mentioned that. Right, you have a gap to close, all the beautiful stuff. Potentially we are testing a current resistance, but it still will be in such a form that will retain lower highs, right? You see the problem here, that you're gonna get boiled, you're gonna get fooled to think that yes, I have upside, because you will see upside, but downside corrections are, it's not less noticeable. People are less consistent in noticing the consistency of them, right? And Microsoft being a big chunk of the S&P, it's inevitable. You're gonna drop. So you see, inevitably, a correction that will come through on the indices will come through on all the individual assets as well. It's not like the asset is bulletproof. That is Microsoft. It's not that surprising, by the way. If you think about it, all of it is not all that surprising because we know what the grand story is. For example, that's why we start from the monthly. The monthly is your grand story, the biggest you can have at any given moment. Because this is going to be just very confusing. You can have, of course, this is your really, really bigger story, but we see the same thing. It's the same structure as the S&P. Does that surprise you all in all? Look at this. Look at this structure, right? Look at this. And look at this. I mean, it's known. It's nothing new here. So that's why I talk to you guys mostly about the S&P, because what I'm saying about the S&P is going to be in relative price, what in relative price movement in the individual assets. You see the shtick. That's why I prefer to focus on the S&P, the main indices. We can look at the Russell. We can look at the Nasdaq. It's going to be the same thing. The QQQ, if you will, it's going to be the same thing. It's going to be identical. It's just this gives us a very, very comfortable kind of Goldilocks time frame. That's why it's perfect. It gives you at any given time, if this is transitioning to the upside, we're going to see evidence of it on the 12 months probably as well in some form. Look at it this way. The 1 month is as far as you can see out of your windshield, and the 12 months is what you can see on your GPS device. That's kind of how you should be looking at this. Oh, on the right chart, Greg. Yes, I know I'm an idiot. We got that part. What is the title? Margin call, Mike. What are you talking about? What is the title of what? Okay, now that we're finally caught up. All right, nannies, I appreciate you liking this. I hope that comes through in an understandable form. I hope. I mean, I try in various ways all the time. There are various other calls, boys and girls, you can watch, but I really do try and make it as simply analogous as possible, so you guys have something to have a reference with what we're talking about, to make it easier for you to understand. Pardon me, give me a second. I'm parched. I really don't like doing eBay. It's not that I don't like eBay, it's just that there's a lot of things with eBay. eBay is wonky. I really don't. If we really want to talk about eBay, I prefer to do this on the Discord in the community. eBay is not an asset. I don't want to look at it. To be frank, I'm gonna be honest. I prefer not to talk about it. It's not a great asset. Let's do this. Let's do this. No, no, guy. You see now it starts. Alibaba, right? You want Alibaba, right? Is that what you're asking for? No, I don't want Alibaba. God damn it. You see, now it starts. Now it starts. There we go. I'll tell you what, that's actually interesting. If you look at this from 1 hour all the way to weekly, what this is, it actually allows you to see the following. Look, so you do have some correction to the downside here, right? That's 1 hour. This, although seemingly right now pointing to the downside, it still is in overbought territory. Mind that, right? Daily is not yet overturned. That means you still have a little bit to go. That's probably gonna turn over next week. So you still have some time. Then you look at weekly, same scenario. It looks like there is a little bit more juice to be squeezed right here. If I had to guess, which I don't like to guess, but actually, look, it is. Mm, 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 mm. Yeah, no, it's interesting. I'm not gonna lie, you do have some upside, and you might make it to previous all-time highs, and in fact, even correct above. Market relation high. It's not a bad one. It is really not a bad one. But the question is for how long, and if you're looking at this from a point of view of a trade, it's not too long. It's not something that you can go for too long with, but you still have more juice to squeeze out of this. I'm thinking around the 80 area, it seems to be, if I'm understanding correctly. You're gonna be in the 80s area, kinda. Are you gonna break and make all-time high? I don't know. With this is very problematic. Yeah, so you're catching on to this range, 63. Your next range is gonna be 68. I'll tell you what. This has some upside. But be very, very, very careful and be very aware, because that upside can come after a correction back to the 50s and 40s. So it's not straightforward, but you have a lot of momentum to be squeezed out, so you can what can happen is that you're gonna break. It's gonna be a flag basically. I think it looks like a flag formation potentially almost, and you that means you'll break back down maybe to your 40s in worst case scenario, but your best case scenario is actually gonna make it all the way back to 80 subsequently. So actually not all that bad, but it's problem. You see, eBay is very problematic. There's a lot of fundamental issues with the company, so I would not necessarily. I wouldn't necessarily myself would. I don't like it. There's a reason why I don't like it. Let's say it just this way. That's a technical analysis of it. I mean, it's not all that bad. Five. Yeah, I mean that seems to be the very strong support and resistance that we're gonna have, at least for the time being. We're obviously gonna retest it again once done. Here we are. Where are you? Yeah, it's like somewhere around here. So very shortly, it's gonna be retested. Yes. What do we want? Poet, please. Let's look at poet. Why not? Let's do poet. Right. Right. So this clearly wants you to drag down a little bit. Now you're already starting. You're probably testing the high twos and low threes. That seems to be. Oh, you're in trouble in this one. Not enough data. Yes. Actually, not all that bad, but after some pain, yes, you are gonna go for a bit of an upside. Then it seems like you're forming a head and shoulders here. If that's wait, that means uh you are gonna, it looks like this. It looks like you go up now, you make some form of a head, right? Some form of a head. You're gonna make some form of a shoulder. So you're gonna end up actually rather high, but that's gonna take you a long time. Because we are now looking on the monthly, so that means if this formation is what the market is trying to do with this, your highs could be high, by the way, could be, what is that? What was the deviation from? Oh yeah, that's obviously that. That's like your high fours or five area, if that makes any sense. Yeah, that's definitely not even a five. That's like, yeah, no, that could be a five. So that's your five. Well, psychological, no surprise, right? I mean, of course, you're gonna have your psychological five. So it looks like this. It seems your current shtick is going to be going back to five. Breaking down back from 5 could be a little bit over 5 back to those twos or threes if you're lucky, making the shoulder short and going upside, which gives you 13, but it's going to take you roughly about 3 years. Because I'm being very generous. Don't look at this, time frame that I'm giving out here. I'm giving the overall formation, right? You can see they can have completely different time frames, and it's going to be very, very prolonged. And you're going to retest certain areas you see, like here, many, many times. God save me, I can't even draw like that. See? So it's going to take a while. For example, this process within itself, if you want to be objective, took 547 days. Ten EMA. What for, Brad? And 10 EMA. You probably, if you ask, you understand probably what an EMA is. First of all, those who don't know, EMA is exponential moving average. Gives you the exponent. It calculates the exponential movement, if you will. Perfect things. Brad, understand the SMA properly before you talk about EMA, and why and what under conditions they make sense, and what are the ranges that should be used based upon what time frames, because the whole tool is being completely abused and misused, which you should have guessed and learned from me by now. A lot of tools are used incorrectly. I don't think you understand why your question doesn't make full sense. How do I feel about it? Yes, it's a great tool if you use it right. I mean, you don't need an ice pick to carve, your butter, if that makes sense. All right, expanding. I'm happy. Mike, come on. Do we have to? I. It really is not my cup of tea. Oh, no, wait. Oh, right. Wait. What are you? Oh, so that's what we're talking about. All right. What is that? Okay. What okay, Mike, sorry for underestimating. My brain didn't go to the right place, right. I thought about a whole different thing. I'll talk to you on the Discord about it. Let's. Why not? You know what? Let's give it a look for a sec. Okay, so you want to fill that gap. That's not interesting. You're gonna do 78, 87, 78. You're gonna do that. That's what it wants to do. That's pretty obvious. Oh yeah, that's certain. um, what were you doing during 2020? You were actually right, which makes sense if you think about it. Not bad. Not bad. You're gonna go down, but you're gonna go up. This actually is not all that bad. So you are kind of squeezing it on the. Guys, we actually found something good. Mike. Mike. Very, very good. I just think I told you. That's, give me a sec. Let's look at this. It seems to be, what is that? I mean, obviously the bottom of the gap, right? But you have something here below. It is here. It's 77.59. That's obviously your next that's your major. Here it is. If you, I got it slightly off. I'm sorry. Or perfectly on. Uh, so that's that. You obviously have you have here. Here it is. Yeah, 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 yeah. That's 86-ish area or 87. Kind of. You're that's here. Okay, so you have this one, obviously. Uh-huh. Yeah, here it is. Right. You can see it, Mike. Let's see. When was the last time you tested this? Oh, like this is rather new, fresh. No, I think I saw. Where is it? Let's see how old this is. Yeah. Okay, so let me just do you a solid one. Oh no. All right, so yeah. Know this numbers. Know the 8709, 77 something. It's kind of there. I might be a little bit off. 8131. That's definitely you're gonna hit that. Like that. Get ready for this one to be a thing, which coincidentally conveniently sits for you right inside the box that you're gonna get taken care of anyways. But once it seems to be structured the following way. Once you're done with this, you are gonna be good. The way it's structured, it seems like you're gonna have some entanglement here, basically, right? You're about to close that thing. You're gonna finish off your monthly, and once you do, you're gonna pop, and that is gonna be beautiful. That is absolutely getting ready to pop. You, sir, found some real nice gem here. It is ugly, but it's the prettiest thing we found so far because it's already in there, if you will. And it is getting ready to actually transition over. This is going to be still, it's going to bring you back down. So that's going to bring us back to 93.47, then 81, potentially 31, all the way through. This is a bit ugly. This, through what we've seen, is going to look like this. You're probably going to make it all the way to the 93 just to go back to the 81. And only then you're going to be allowed to move on to 105.9, 109, that range. So it's going to be a bit annoying. You're going to be thrown all over the place, but your end result with this, which is 109, 105. Subsequently 122, which will take you, give or take, also a couple of years. So it's not straightforward, but not bad, Mike. Wow, you actually found a gem. You, Mike, found a decent gem right there. Um, okay, I see. But you found something nice. I mean, you found something interesting. It's the only one that doesn't seem like its future is very, very painful. It is painful, but it's not as painful as the rest. It's actually not all that bad. Yeah, no, absolutely. It's actually not over. If things will go sideways for you, like really sideways, or for whoever holds this, I'm not surprised by the 77. The 77 is very important. More so, it's a range. It's probably gonna be 77 to well, this is really tight. So yeah, it's good. This one probably 79. Call it a 79. Let's just call it a 79. Um, but then again, your actual low, if shit hits go not pleasant, is this. Is that 66.26? Just for you to be in the clear to how unpleasant it can get. Mm-hmm. Okay. Uh, Everyone, please like, subscribe, share, ring the bell. If you're not, a regular here, join the Discord, Patreon. Links will be in the description below and in the chat. Notice the admin Nanny posting, Nanny's clan posting the links. Don't forget to confirm the rules, otherwise you will not get to see the server. You will be stuck at the doorway. And that is that. All right. Let's go, let's go, let's go. Let's see what we are doing in the time being. That's actually tremendously impressive. This is crazy, I gotta say. That is rather impressive. Brad is an admin and training. Absolutely. Absolutely. Uh, still Tom Dragon. Never in. Right. Although again, we have very few people here, so I don't know how important it is to mention. But still, be very attentive. Tom, nor I, no one out of the staff, Tim, nannies, no one will ever DM you out of nowhere, start talking to you and offering you some crypto nonsense. None of it will happen. So, yeah, be aware of that. Be aware of scammers that impersonate ourselves. Yeah, no, I don't think I've missed anything. I'm really looking through the chat now. I don't think I've missed any tickers. Let's see what the momentum is doing. I'm starting to think we're gonna have negative power hour today. It just might be so that we're gonna get a strong reversal today towards the end of the session. Still, as the structure stands. Absolutely. If you want to become one-on-one student, learn how I do technical analysis in depth. Not this is very basic. There's a lot of stuff here that shows up on the screen. You don't understand why I do. It's not just the tools, boys and girls. It's about understanding when you apply the tools, why in these instances, how you read them, all various things that most people who even talk technical analysis on YouTube don't really talk about these things, nor do I really in the videos themselves, because you need to understand the actual know how it really works, and it takes hours to comprehend, then a lot of practice, and only then you really understand these tools. It's going to be pointless if I'm going to even trying, attempting to do that here. So I do a one-on-one academy. I still have 2 spots available. Those who don't realize, these spots get closed and that's it, for a while, just because that's how much I can do at a time. And once they're locked, that's it, boys and girls. And until further notice, they're locked. The price is stupid cheap. It's like getting a Lambo for $100, and then especially in comparison to the prices of what other courses are offered online. Trust me, I've seen some, and I've been sort of I've been around. it's basically chump change, and you get a lot more than you'll get on any course. You get to become a lifetime member in our community and other great benefits that I don't want to be selling you on. That's not why you should be buying the course. You should be buying because you really want to know how to do proper technical analysis. That is that. How to learn or know more and have more questions answered about the course. You reach out to me on Discord, you DM me, direct message me, and that's how we start a conversation, have a voice call, and if you like it, we proceed from there. Okay, I think I've covered that a little bit. Yes, Hope. I am still very bearish. It is bearish in the context of things. You see, when we were going through the bearish period right here, right? I was calling out how we're going to be bullish, right? So I'm not bearish as a rule of thumb, right? That's not who I am. I'm not a bear. I am what the market gives me. I'm an analyst. Market gives me X. I know how I learn. I see how I learned the market at that time, and I learn how I can navigate around what the market is offering and make the most out of it, if that makes sense. Varsh. Can see any market. Yeah. Luis, what are you trying to say there? Top now. It seems to be. It seems to be so. Yes, we are trying to look. We are very early on into the breakdown, if I'm correct, and only the people who are armed with the right knowledge are able to notice and see this. The market is a mechanism that normally will have corrections even if going to the upside as such, right? You have a correction. What is special about this one, to understand what is unique about this time around, potentially, again, as we see, you need to understand the harmonic patterns and the rhythm and the cyclicality of the market. That takes a lot of studying and a lot of knowledge that will then make sense. Otherwise, it will not be visible to you until it becomes too late. That's part of the trick. What bread? What? X? What am I saying? How? What's? You're confusing me, man. What is special about how I say X? I think about it now. I say it normal. I think it's nothing special about my pronunciation. So that's pretty impressive, though. The fact that we've been running all along and actually closing this this gap, this thingy. That's actually look, Apple, Snapple, Apple is very bearish, and the only thing Apple were able to do out of the whole thing is basically hold on, and instead of break down back to that 217, which is the actual being support that's being tested. Here I showed it before. It is highly tested level. It's very, very important, very strong support right now. It's not right now. It's support, but as the momentum is structured, and because Apple again being a big part of the overall market, it's gonna break. Now, for that, you really have to look at the story of Apple and see how they're just deteriorating, and they have been for the last whatever amount of years. And uh, uh, yeah, it is what it is now, Mama. It's I have it is bearish. The question is how much can you squeeze before it breaks down completely. I sadly do think right now we're already testing somewhat highs. You still have that weird gap that is sitting on top, but I'm suspecting this thing is planned to be left out for the far future. That's what I'm suspecting based upon the momentum, because look, even on your hourly, your momentum is already pointing to the downside, right? You're already starting to break and it hasn't started even getting amplified. That brings me back to test 217, break below it, and subsequently test lower and lower. We do know that we haven't established a lot of supports and resistances here, and there's a lot. We have tested some of them, right? You see past, but that transition is kind of abnormal. It's almost like we skipped a step, and it's not like the company is doing all that well right now to actually justify it. Some people say Apple are always doing well. I would argue otherwise. I look at the number of executives that quit their car project. Look at their Google Glass, the Apple Pro Glass, blah blah, you know, face thingy, which is horrible, grand fail. It doesn't look like it. It looks like the momentum is structured as such that even if you're gonna dash back and forth, you're gonna be doing that on the 217 area, right? You're no not actually. It doesn't seem like Apple is actually able. Look, you have a lot more bearishness in the system, so it's very very unlikely. You are basically not even. You haven't again. The correction, as you see, haven't even started yet. You're just going through that transition of the curve flattening basically, and now the crossover, right? So this is just the beginning, just the first smell of it. So yeah, of course you have something here. It's gonna be, I think, 170 probably. We know that. Remember that one, the 130. Yeah. You're gonna go back, I think, Mama. What it looks like to me that it's gonna go back to the old range of 170, 130. That's what it looks to me like. The bot, of course, is gonna be like I don't know, maybe $100, 120, 110, slippage of 100, kind of. It looks not play. You still have time. The thing about it that a lot of these tech assets, they're kind of look. You see what's going on. You see, these. This is why I say these processes oftentimes get very prolonged, and it only happens sort of. They're boiling the crab now. The crab does not get boiled overnight. It's gonna take a while. You might even still you might get rid of some and still see the price jump up again. It's not going to save you. It's not going to be enough to actually save you, sadly. It seems like the market is far more prone to correct deep down. Like we said, 130, 120, maybe 100 is just kind of very, very stretched. I'm not going to lie, because the actual support is at 130, right? So even with slippage, you can make it to 120, 110. 100 is difficult, but if you make it to 110, then the psychological stuff starts working. You become too close to 100, and then it's going to be almost inescapable of actually testing 100. Although, if you will test 100, it's going to be like for a day or two. It's going to be not. If you ever get to see 100 during the recessionary period that is up to come, that's probably the right time to buy. 100 on Apple is a very good price. It's a wonderful price to buy. People don't know. I used to trade Apple a lot. I really used to like Apple. It was very easy to trade. That's stochastic RSI. It's a bit different than your. Yes, it's a bit different. Gives you again a bit of more of an exponential view of things. Similar to regular RSI, it's just that this range would be 20 and 80 instead of 30 and 70. And the way that the mechanism itself works, it will inherently smoothen out abnormalities and anomalies in the price action. So it will give you a bit of of an objective view on things, if you will. But it has the same f up, it has the same issue and shortcoming when it comes to the regular RSI. You cannot see the full wave. What you see is a seismograph that goes up and down in a linear form. So yeah, you can see your temporary directional indicator in this, but you don't see your long-term like you really need to know how to play with the time frames to get your directional indication from it, if you will. Wow, 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 wow. This is phenomenal. I mean, honestly, I did not see this gap getting closed. Those who've been following, I said, I don't think we're going to close the gap. Right now, as it stands, it looks like we're going to close the gap, boys and girls. The gap really wants to get closed. All right, I think we're going to adjourn for today because I don't just want to be sitting here forever. Because then, if I'm going to sitting here forever, what's the point of doing a market close? So we're gonna close this up. This is very impressive. This is very impressive. It looks like we're running on fumes, but with every bubble of fume that we do have in the system, we're running a bit higher, a bit higher, a bit higher. I'm actually not gonna be surprised being that so close to the top of the gap if we're actually gonna finish it by the end of this session. And only at the end of the session is we're going to have the negative power hour taking us significantly low quite quickly, which I hope, because then if we keep it for next week, it's going to be very, very weird. We might get. It's going to be very weird. Basically, we're going to be fighting on the next gap, which is right above us. Giving us very rational market. That means we still haven't seen the previous high point, giving us a double top and a proper bull trap. But we'll have to wait for next week to see that. I do perceive the market to turn around prior. In fact, I'm surprised we've gone as high as we have. I thought the market would break prior. I didn't even see us going as being able to break the 55555 properly, let alone the 584. So you see, boys and girls, I can get things wrong as well sometimes. I've underestimated this wave, if you will. That's that part of things. You guys know I get a lot of things often right, but in this instance, I underestimated the market a little bit. Does that change anything for us? No, it doesn't change anything. It just prolongs the process, makes it more tedious and slow. That's it. Hope. The details of the academy are in the Discord, or more so, I prefer. I don't know how the regulations of all that YouTube stuff work, and I notice a lot of people for some reason don't name their prices on the Discord. I don't know why, and so I'm kind of avoiding it right now. But I don't mind telling, of course, go to Discord, you'll find it. It's I'm gonna write it down, so I don't know. I hope that's not against the rules. It's a one-time payment. Of course, it includes the whole subscription to the Discord. You become a member, lifetime member, and all that beautiful stuff. As Brad said, it's like buying a Lamborghini for $100. It is actually very, very, very cheap. For those who don't know, relative to what I provide, and relative for just the overall value and the overall prices that are offered in other places, and the actual value you get for what you end up paying. I know people pay up to 4 times that and end up with what I talk about in my live. So value is definitely there. No, no, no. That's in USD, Leo. That is in USD. No BTC. In fact, that's why I made the whole USD thingy. That is it. Boys and girls, we have adjourned for today, at least for the market open. I'm sorry it took me so long. I'm going to try and make sure next week I'm going to be on time. As you know, it fluctuates a little bit. Obviously, we're going to try and make the market close towards the last hour of the market. I'm going to try and be here on time. Cannot promise. And yeah, just like Nanny's just wrote in the chat, if you are interested in knowing and learning more about my one-on-one technical academy, DM me, direct message me on Discord. Let me brag one final last time. This thing, you locate me by finding me on the top of the members list. You go right there. If you don't have it available to you, you need to press this show member list. It's this little icon. Looks like 2 little people if you see. And I will be on the top of the members list. You just DM me, direct message me, send me a message, right? Click left or right click or whatever, you're gonna have it's gonna be pretty clear. Once you do, we're gonna converse in direct messages and I will give you all the details. That is that. That's it, boys and girls. I will see you on the next live. I hope you enjoyed this as much as I did. And I'm sorry for being such a moron. I'm going to try not forgetting switching the screens next time. See you. Bye bye.